US President Donald Trump has confirmed his administration will enforce 25% tariffs on Mexico and Canada and others on China as well, stoking concerns of a trade war and sending local financial markets into a spin. China and Canada have announced reciprocal tariffs on US goods. Let's bring in the ABC's chief business correspondent, Ian Verinder, who's here in the studio. Hi, Ian. A very busy day in terms of these tariffs. Perhaps best start with explaining to us who's placed tariffs on whom and what are they?
Well, Donald Trump about a month ago threatened both Canada and Mexico with 25% tariffs and also tariffs on China as well. Now, he gave a brief reprieve to both Canada and Mexico with the idea that they would come to some kind of agreement, they would accommodate America's wishes in terms of not just trade, but the fentanyl trade that was coming out of China. Now, there does seem to be quite a bit of progress made on that fentanyl front, but nevertheless, Mr. Trump has imposed the trade sanctions as promised, which they were due to come into effect tonight, actually. So he's announced them early. With China, he put tariffs in place back in his first term. They were left in place by the Biden administration. He imposed a 10% hike a month ago, and now another 10% will come into force tonight.
How does it work? I'm talking about consumers now and purchasers. Who suffers?
Well, your own constituents suffer, your own country suffers, because you're importing something and you're putting up the price of it. So your consumers are the ones who end up paying the price. The way it actually technically works is, for instance, in America, an American shoe distributor buys shoes from China. As soon as they land on the dock, he signs a piece of paper and pays that tariff. So the importer pays the tariff, and what's he going to do? He's going to go and sell them to his customers at a higher price.
Why does Trump like tariffs so much then?
He doesn't seem to get that that is the case. He seems to think that, and I've heard him say this many, many times, that China will be paying. Yeah. In fact, everybody ends up paying because your own consumers pay more. There's probably going to be less output in China because the landed price is going to be higher. So the Chinese market will suffer as well. So there'll be less jobs in China and so forth. So it'll definitely hit the Chinese economy.
And next, he's threatened Europe, and that potentially might include Australia.
Well, yes, he's threatened Australia with tariffs as well, and the Treasurer Jim Chalmers was in Washington just last week trying to argue the case for Australia, an exemption for Australia, based on the fact that America runs a trade surplus with Australia. So, they basically have a much better trade position with us. So the argument that there's we're ripping them off, it doesn't hold water. So I'm not sure that argument will win the day, though, because there's been quite a few people within the Republican administration arguing that Australia shouldn't be excluded. We also export some steel and some aluminium into America. Some of that is subsidised here by the government in terms of energy subsidies and so forth. Rio Tinto is one of the world's biggest aluminium producers, and it exports quite a bit into America from Canada and Australia.
Would you say we are already in a trade war, or is that just a bit down the line?
No, I think that's undoubtedly the case now. So these new tariffs, particularly on your closest allies like Canada. Canada's stood side by side with America forever in every confrontation. So has Australia, for that matter. And Europe and America have had such close ties now, diplomatic and defence ties for 80 years. So to be making those kind of threats, that's definitely a trade war. Interestingly, Mr. Trump seems to be in the position where he's wanting to reduce trade sanctions on Russia, where he's at the same time simultaneously putting trade barriers in place against his allies.
You know very well that markets don't like uncertainty. No. How have they reacted today?
Well, I mean, the uncertainty is what the impact of this is going to be on the global economy. So on the one hand, it could be highly inflationary because it will push prices up for consumers, and it also may, really hit the global growth. So we could have a slowing global economy and another spike in inflation, which is the worst of both worlds for a central bank, because when you want to try and hit inflation, you want to bring it back under control, you raise interest rates. But raising interest rates slows the economy. So generally speaking, you would have, if you've got high inflation, you would have a booming economy. And so when you put higher interest rates in place, it brings economic growth and inflation down. If they're moving in opposite directions, it's not a great thing.
You've got an excellent piece on the ABC News website, Ian, which I read, and you talk about the potential possibility of America going into a recession as well, but that actually the Trump administration might not mind that in the short term.
Well, there is a bit of a theory out there that they wouldn't mind a slowdown at least in economic growth to bring interest rates back into play. So if you get interest rates coming down because growth is slowing, that would reduce the American government's interest bill on its huge debts. As I said, though, the problem with that is, though, if you do this by pushing up inflation, it's going to make it awfully difficult for the US Federal Reserve to bring that under control.
Ian, always good to have your perspective. Thank you so much.
Thanks, Lorna.